Now we're about to take a deep dive into the uranium sector, and I'd like to welcome up our moderator and our panelists. We've invited the founder of the Outsider Club, Nick Hodge, to moderate this discussion. And when it comes to uranium, Nick's as good as it gets. And his newsletter, The Outsider Club, has grown to at least over 400,000 subscribers, which is absolutely remarkable. So Nick, come on up on stage, and Nick will be joined by Purepoint Uranium Group and Alx Uranium Corp. Thanks, guys.
Thanks, Jay, for having us. I just wanted to take a picture of the audience real quick, so that way when uranium's at $75, I can compare the standing room only versus what we have today, because it's coming.
All the seats will be filled.
Exactly,
Yeah.
Standing room. So as Jay said, we're going to take a deep dive in uranium. At first, I'll let the two gentlemen to my left introduce themselves and their companies, and then I'll take a seat next to them and we'll talk more macro uranium stuff. So behind the stage there, the gentlemen were arguing, and President and CEO of Purepoint Uranium, Chris Frostad, said that he was older, so he gets to go first.
Thanks, Nick. I'm Chris Frostad, President and CEO of Purepoint Uranium. We're a uranium exploration company working exclusively in northern Saskatchewan in the Athabasca Basin. We have 10 projects currently in that area. The one that we are spending most of our efforts on these days is called Hook Lake. It sits on the Patterson uranium district adjacent to Fission and NextGen, and we are all working through that same trend, in our case with our partners Cameco and Areva. Now Orano. That's $1.
And sitting next to him is Warren Stanier. He's the chairman and CEO of Alx Uranium.
Hi, Warren Stanier, Alx Uranium Corp. My description of our company is going to be very much like Chris's, because like him, we are explorationists and we are exclusively in the Athabasca Basin. We have projects located in the northeast. We've now staked some new ground. There was a lot of ground that came open in the last few months, but also our flagship project, I would say, operated by Denison, is in the south part of the basin, the Hook Carter project, which is directly on trend with his project.
Fortunately, all the good stuff stops at the claim line. So yeah.
So we're neighbors.
So I want to get back to your projects in the basin in a bit, but first I want to talk through the uranium industry. Everybody wants to know the answer to the question when, right? We know that it's going to happen, that uranium supplies 10 to 20% of the world's electricity, but it's sort of been in a funk, or more than a funk, since Fukushima. So I gave a talk at the last Cambridge show back in January over at the other convention center, the west part of it there. And I tried to answer the question, is it uranium's time? And I said, yes, it's uranium's time. The time is now starting. The spot price is off the bottom a bit. And since then, we've seen some of the equities have, quite frankly, good buoyancy. We've seen some stocks perform quite well, and others haven't started to perform. I won't say they're underperforming. They just continue that trajectory that the uranium sector has been in. Why do you think some uranium companies are starting to perform or to get traction?
Well, personally, I don't think we're actually seeing any traction yet. I think the biggest movement we saw was back in February, when we saw a lot of the larger names took quite a hit, and I think that was primarily due to the Global X Uranium ETF rebalancing their fund. They moved from pretty much a pure uranium ETF to more of a nuclear ETF, which meant they started to bring on new names, new contractors, construction companies, whatnot in the industry. And by doing so, they relieved themselves of a lot of the pure uranium plays. I think they've announced they were taking Cameco from something like 25% of the fund down to 21. We saw NextGen go from, I think, 11.5 down to 7.5. Uranium Energy took a big hit as well. And in doing so, they released, okay, they found us. In doing so, there was a lot of sell-off in those names that we saw. And what we're seeing now, I believe, is those big names really have come back up to where they were in January. So I think we're not so much seeing stocks taking off as we're seeing a recovery of what happened in February and March. And I think for the most part, all of us investors seem to have found a happy value for us right now over the last 5, 6, 7 months with very little movement. And I don't think we're going to see a whole lot of joy until we see uranium prices take an earnest move.
I would say that it's very selective, that it's company by company. I mean, Cameco has reduced production. They're only producing 9 million pounds now, and they're buying 9 million to meet their 18 million that they need. And I also read that they're taking more from inventory, so they're holding inventory somewhere. Because of their curtailed production, I would say that's why they've gone from, I look at the US price, like below $10 US to about 11, up to 11.50 recently. So they consider that a nice move, and I think they're gratified that the cutbacks that they are making has resulted in a higher share price. I mean, our companies as explorationists, we're not moving because we're not producing, and we're not curtailing production. So all of these factors influence the share prices. Also in the U.S., I've just read that there's a petition has been made to the Department of Commerce by 2 U.S. producers that they're looking at. They want to have certain producers in Kazakhstan and Russia declared as, well, like market meddlers, that they're overproducing or they're being subsidized or whatever it is. They want American producers to gain some favor, therefore they will produce more themselves. So their shares have gone up, and I believe it's in reaction to that from January.
So I was going to ask about the U.S. administration later, but that's a pretty good segue. Where does the politics play into all of this? The United States is something like 90% dependent on the uranium that they import. You talk about the petition that UR Energy and Energy Fuels just submitted, and then you have Trump as president, who is seemingly protectionist and wants to initiate or at least win trade wars. What kind of policies could help, or what kind of policies would you like to see that could help North American uranium?
Well, I think the 232 petition you talk about is more pressure than it is reality at this point, and it does make sense that there's a good chance that might even go through. But you've also got Russia threatening sanctions against the U.S., so they're not going to deliver uranium to the U.S. sites anymore as well. All of these things are going to create upward pressure in uranium prices. I think it's just really going to come down to supply. We've seen the cuts in the production. We've seen to your point, we've seen the Camecos of the world, and a lot of the other producers are soaking up inventory. They're buying on the spot to fulfill their contracts. And at the end of the day, I think Kazakhstan really holds the lever in terms of uranium prices at the end of the day. So I think a lot of the politics are somewhat noise. They're going to provide positive pressure for the price for us. But the real things that are going to make the price come back are is the real supply.
Well, let's talk about supply in Kazakhstan then. They're slated to IPO their production arm, Kazatomprom, and to do that, as I understand it, they've created a marketing arm that's going to take possession or buy their uranium and then market it and sell it just like a Western company would. Do you guys have any thoughts on that, the IPO of Kazatomprom and how that impacts the uranium industry?
I don't have any thoughts on it. I hope it doesn't go through.
No, well, the problem at Kazakhstan was because of their transfer pricing laws. All of their product, for the most part, has been sold into the spot market, not into the long-term contract market, right, because their pricing has to be validated by a market price. And so all of that product that they've been producing and flooding the markets with is going into the spot. So where we would typically see the spot market making up 5, 6, 7% of the total uranium market, it's now grown to over 20% of the total market. So by setting up their marketing arm, wherever they set it up, at Switzerland or what have you, what you should see is them starting to move their uranium through that marketing arm and setting up proper long-term contracts. It also gives them a tax break out of Switzerland, certainly, by getting the sales up in that area as well. So I think it's going to allow them to certainly cease doing what they've been doing, which is flooding the market, keeping the price down. And I think now that the likes of Cameco and whatnot have cried uncle, you're going to see them pulling the lever and pulling this stuff back up, the price up.
Nick, can I just go back to the U.S. and you asked about, well, I think you're alluding to the Trump effect, and I think right, there is a real effect that the President of the United States can now make decisions on trade, and if there was some kind of a tariff put on exports from other countries of uranium that's going to spark U.S. production. So as far as how Canada benefits, I'm not sure, but I know for a fact the permitting in the United States is so streamlined compared to what it was for 8 years. And I just found that myself in Nevada and another company, that we got a permit so quickly, and we're sustainable. We're not going to ruin the environment. This is not for uranium, but I'm just saying that for uranium producers, it's going to be easier, or for explorers, to look for uranium and therefore produce uranium, and combined with tariffs, that could really boost the North American industry. Canada, I'm not sure, but the U.S. for sure.
Well, I mean, your neighbors, right? Rising tide is how I would look at it, a catalyst, right? If that would be a spark, if they were to put, like you say, a tariff on uranium imports from another country, that's just a spark that helps the price of uranium go up, that lifts all uranium ships, I would assume, right? So, when I talk about the uranium market, or when I see videos online, or I read things about, analyst reports, Haywood was just out yesterday saying it looks like a great time to buy uranium stocks. Certain things are always mentioned. We've covered some of them, the production cuts, supply. Let's talk a little bit about the other things that we always hear about. Let's talk about Japan for a second. I think the 8th reactor was just restarted, or initiated to be restarted this week, and they've got at least that many more to come back online. How do you guys view Japan? Is that a critical part of the thing, or is the ascension of Chinese build-outs and Indian build-outs enough to supplant that?
I think Japan has turned into a bit of a red herring when it comes to signaling the return of uranium. Certainly, Japan shutting off 10% of the world's reactors was the downfall to all of us, and it certainly caused the problem, but I don't think it's necessarily the correction of the problem. By the end of last year, global nuclear power generation had exceeded what it was pre-Fukushima. So in fact, there'd been enough other reactors turned online over the last 5, 6, 7 years to make up for what was lost in Japan.
I think there's now more reactors online than there were pre-Fukushima.
Absolutely,
as well.
absolutely. And if you project that forward and look at what's under construction today and how they'll be turned on, we are really in a position on the demand side of seeing global nuclear power really hockey sticking up, and that is in the absence of any more reactors being turned on in Japan. Certainly, it will be helpful when we see those things turned back on, but it's not the bellwether that things are better. I think people are a little overly focused on the Japanese reactors now. There's too many other factors at play right now.
Yeah, I disagree.
Thank God.
I think Japan, from a perception level for investors, if Japan restarts reactor after reactor and we get up to, say, what did they have, 30? And now the 8th has just restarted. And I know in Cameco's view, that's really important to the marketplace. So I'll go with them, and I'll vote that Japanese reactors are important perception to the marketplace. But the big thing is it's electricity demand. So where's the demand going to come from? And I think we know, don't we?
No, I agree. Yep.
Where's it coming from?
It's coming from you and me. Yeah.
I want to throw a little curveball. I'm sorry. Can we talk about underfeeding for a second? You have some detractors, let's call them, of the uranium market that say there's enough supply because you can underfeed. First of all, explain to a neophyte like me what underfeeding is, and then let me have your take on it.
Well, I'm not an expert on underfeeding, but I can tell you that what you can do is when you are I'm going to lose the word here. Enriching. When you are in the enrichment process, if you leave your fuel in, or if you leave the product into your centrifuge longer, you can actually create more. But I think, as I understand it, it's a bit of a trade-off. It's not creating a lot more fuel in the long. It is in the short term, but I'm not going to explain this properly. I think it is a trade-off in terms of their capacity. So what they're doing is they're using underused capacity by doing the underfeeding. But when there is adequate product coming in, that's the more profitable way for them to produce fuel, so they stop. So it's kind of one or the other. They're not creating a whole lot of additional inventory in the background.
Right.
All I know is it takes 1 to 4 years, so pick your spot for the enrichment of fuel. So 4 years is a long time. If there's big demand, then they're going to take less time. If there's less demand, they'll probably take more time.
Yeah, I don't think it's really created so much more inventory that it's become a problem. What it has allowed is for the enrichers to continue to operate profitably during a downtime.
Can we talk about the utilities? Because we talked about mostly everything else at this point, Russia and Japan and China build out and things. But for me, one of the most important things is for utilities to come back into the market and start contracting in a big way. Because it seems like they all follow each other and they really don't care how much the price is once they all start following each other. And again, we go back to the question of when. What do you guys know about the utility contracting cycle, and when are utilities due to come back in and start contracting?
Well, I think if Dev were here from Fission, he'd whine on about the fact that he can't understand why the utilities aren't contracting the hell out of this thing right now, that all the prices are low, and he's right. What has been interesting is that as all of these pressures on supply have come into play over the last 4, 5, 6 months, what we've seen in terms of long-term contracts is absolutely no transactions whatsoever, for the most part. The price is currently $30. It was $30 last month, the month before, etc. Not because people are trading it at $30. That just happened to be the last time it was contracted. And I think what's been interesting now that all these supply pressures are there, that it's like crickets out there. It's a big standoff, and we're waiting to see who blinks first. The utilities are really, I don't think any of them want to be the first guy to come out and set that new price that isn't $30 anymore. And I think if they were going to buy at a discount, they've missed their window, because now that the producers have taken the hit that they have, I don't think they're going to be willing to hand off any bargains as well. So I think the producers are in a position now to demand a higher price. I think the utilities just have to decide, when and how they're going to sign on the dotted line and accept a new price.
But they're not in a hurry, because one of our directors was at the Madrid World Nuclear Fuel Cycle Conference in mid-April. According to the notes that he gave me, there's 1.79 billion pounds of uranium in inventory right now in the world, and utilities own 53% of that. So they're not in a hurry. They can do as they please right now. But if the demand for electricity comes in the next 3, 4, 5 years, electric cars, desalinization, some of these factors that really haven't been calculated yet, that's when we'll see a change.
Yeah.
So we have to be patient.
2 points I want to make on that is, for utilities, I think the contract price is going to have to be higher for a couple of reasons. One, nobody makes money at $30 or $40 uranium, nobody in the world. And second of all, I think an important point is that once utilities do start buying, it's really not important to them what the price of the uranium is. And this is a point I tried to drive home. The cost for a utility of building and owning nuclear reactors is just that: building, owning, maintaining, decommissioning. The fuel, the uranium, is a minuscule part of that overall budget, that overall capital outlay. And so uranium 50, uranium 80, it's like they really don't care. Is that fair?
Very fair.
No, that's absolutely the truth. I think everybody's heard Rick Rule go on about this as well, and he's right. If the price of uranium doubles, it barely notches the price of a kilowatt hour. So in fact, if it does go 50, 80, 120, they'll just keep buying it.
And then to Warren's point about the growing electricity demand, we want carbon-free electricity now in the modern world, things that don't emit carbon, and uranium is one of them. In fact, it's the only form of electricity generation, baseload power, that is carbon-free. Not only carbon-free, but safe. Some people might want to have a debate about that, but per kilowatt hour of electricity generated over history, nuclear energy is the safest form of power the human race has ever seen. Fair?
Are we going to disagree with you?
I think they're good.
So let's turn to the basin where you both operate, and particularly, I guess, the west side of the basin, which is something new. So, both being experts in the basin, can one or both of you give us a rudimentary history lesson on the development of the basin? Because as I understand it, not being a geologist, we've gone different routes. We've gone now through the unconformity to the basement, and now we're drilling deeper for uranium. And also, it used to be the east side of the basin was the hot spot, but then Fission and NextGen did this thing, right? Can you explain?
You can go, and then I'll come in.
Yeah, certainly the western side of the basin's been opened up as recently, and thanks to the work of Fission and the work of NextGen. We're working just north of them. As I mentioned before, this entire Patterson uranium district that we speak of is it's really a band of conductors and shears that flow up through the area. We've measured it to be about 30, 40, maybe even 50 kilometers into the basin. It just gets deeper and deeper and deeper. Both Fission and NextGen's deposits are just outside of what we know as the basin, just outside of the sandstone. We're just on the inside. What's been interesting in the last few years is that we've been doing a lot of drilling in that area. We have one small deposit called Spitfire that we've done a significant amount of work on, and we're now opening up another area called the Dragon Zone. And what's been unbelievably useful, of course, is comparing the two. And what we're seeing is that the setting, the way the mineralization is presenting itself, the way the alteration and the silicification is presenting itself at Dragon is identical to what we did see down at Spitfire, and it's what we understand to be the same setting down at Triple R and down at Arrow, and hopefully what you'll see and just to the north of us.
We're very gratified that Dragon is so good because you're getting closer to us with every drill hole. We love this.
But it is definitely different than what we're used to seeing on the east side of the basin, where the unconformity deposits it's a different setting. We're more into basement-hosted deposits now on this side of the basin, and we have another project called Smart Lake, which is further to the west, that we were quite successful in a few years ago. We moved our efforts over to Patterson Lake, but now that we've done the work that we have at Patterson Lake, we recognize what we were seeing over at Smart Lake, and it's identical as well. The settings are all very similar, very common, but they are very different from what we're used to seeing on the east side.
And one thing I can say about the east side, Cameco found, as SMDC, MacArthur River, arguably the greatest uranium deposit ever found, in excess of 600 million pounds at 20%. It's just a fantastic deposit. They took that knowledge, they came over to the southwest, to Hook Lake, right, your project, and they saw things that they called P2. And I see it in their reports. P2 is the main zone at MacArthur River. They see the same characteristics in the Hook, in the Patterson Lake Trend, the Hook Lake property, the Hook Carter property.
Right.
So it was them that kept that alive.
But I think to a point I've heard you make many times, and you're right, is that the model of the day back on the east side was to drill down to the unconformity, maybe 20, 30 meters below that. That's where you were looking for your deposits. What we're seeing is that the mineralization doesn't even start until you get down around 40, 50, 60 meters below the unconformity. So a lot of the drilling that was done on the west, down where we are and in that entire area, was all stopping short. They were stopping the drill just when they were starting to hit what we would consider good stuff.
There were some famous near misses back in the day.
Absolutely.
One Cameco, what they did see was alteration on the Hook Lake corridor, and I see reports going back to, say, 2000 when they're saying, there's something really big here. We just don't know where it is yet. And so what do we find? We find Triple R, now Arrow, and all these deposits, now Chris's deposits, and now Denison's drilling on our property. So this is just beginning, really.
But the work goes back decades. So Cameco, Areva, Uringa Cell Shaft, all were working in that area decades ago and seeing Uringa Cell Shaft 3 more times, and they've picked up a lot of the sampling that we're following up on today. It was all there, and that's why they hung on to those projects.
So what I'm sensing is that it's elephant country. You mentioned Triple R, Patterson Lake, 100 million pounds, likely much more still to come. Arrow, 200 million pounds. 300 million pounds. Do you think are there more giants, I guess is the question, and maybe you already answered it.
Nah.
Well, I like Denison as a partner because they think that as we go up the northeast trend that the deposits could become even richer.
Wow.
So I like people that say things like that.
Sure.
I definitely think there's a lot of room for some more big deposits, mainly because the ones we found so far are huge. There's too many big deposits in the basin right now. There's MacArthur, you say, but there's Cigar, there's Triple R at 300 million pounds each. You've got Key Lake at 150. You've got Triple R at 150. So I mean, they're all too big. Typically, in any region in the world, you may find this massive copper deposit with a bunch of really good other deposits in the area. there's too many big ones here. I
Well,
don't think we found the big one yet.
We're going to need a mill, that's for sure.
That's right. Well, now it might be a mile down in the middle of the basin for all we know, but I think there's a bigger one out there.
Yeah, the trick is what's your depth of investigation? So if you're, like Triple R was found at 60 meters, the first drill hole that hit mineralization. That was shocking because it was so shallow and so rich. So now here we are, we're going deeper.
And it had always been there. Nobody's.
Well, the Orano guy says, yeah, we used to drive by there like, twice a week, on the road to Clough Lake. But, certainly it's not practical to drill 1,000-meter holes in searching. I mean, once NextGen found Arrow, then they just started following things, and that's different. That's more
We
practical.
went deeper, yep.
And I mean, the proof's in the pudding. We've certainly, the likes of Cameco, Orano, Denison, are not spending millions and millions of dollars in that area without believing that there's the opportunity to find a tier 1 deposit. They don't waste their time.
So back to the macro, and then I'll let you wrap up on your projects because we have 4 minutes left. Crystal ball, 18, 24 months out. What's uranium look like, both of you?
I'd like to see it at minimum of $25 on the spot price and in excess of 40 for long term. Do you know the long term? What is it today?
Well, right now the long term is $30, and it has been for months now. I think, and I go back to the coiled spring analogy that I've heard a few people mention. I think this pent up deer in the headlights kind of waiting that's going on with the contracts is going to somebody's going to blink, and I think at that point we're going to see a jump. We've historically, every time uranium's come back, it's come back with a ridiculous vengeance, and I don't see any reason why it may not do that again. Definitely over the next 2 years, it's got to go back up to $50, $60, $70. It has to. I'd like to believe, it's my thinking as we look at some of the numbers coming out, that we're going to see that jump happen sometime in the next 6 months.
Okay, I'll go with that.
And before I get back to your companies, explain to the audience what that means for uranium-related equities. Maybe some people weren't around for the Cigar Lake flood or in 2007, but what happens when the uranium price starts to go up? What happens to uranium equities, especially for 10, 20 million market cap companies?
It explodes. I was part of UX Corporation back in 2004. All of a sudden, things started. Nobody wanted us. That's right. And then all of a sudden, the price.
Sort of like now?
Yeah, well, that's it. Warren Buffett says buy stocks when nobody wants them.
You can tell by the extensive panel they've assembled here today.
When it goes fast. So, I saw uranium go from $15, $20 to $100. Now, that was accentuated by people speculating in the marketplace. If that comes back again, then watch out.
Sure.
Then we could be at $70, $80 uranium.
I think right now, if you look, there are less than 20 public uranium exploration companies on the planet.
Less than 10 producers, I think, or something like that.
And there's less than 10 producers, and there's less than 20 developers. The sheer demand for our stock is going to drive. there's not a lot left. I mean, there's only a few left standing, and I think you have to look at all of them, and we will certainly all rise with the tide. But I think the ones that remain, that are still around, the ALXs, the Purepoints, and the others of the world, are here for a reason. We've got projects that were worth hanging on to through the downtime. We've been able to find support where others haven't through this downtime, and we've been able to keep ourselves busy in moving these projects along. So I think there's a lot of opportunity right across the board. And historically, as you say, whenever if the uranium price doubles, we quadruple.
2 minutes left, a minute each. Recap your projects, your companies, your tickers, and your booths.
Alx Uranium, we trade on the Canadian TSX Venture Exchange under the symbol AL. We're at booth 210. We can show you the evolution of the uranium deposit model for the Athabasca Basin there and fully explain it, how things have changed from 1970 till now. And yes, we are going and looking for deeper basement-hosted deposits because, in our opinion, many times uranium was found at the unconformity, that's where the sandstone and the basement rocks meet, and not enough drilling was done. If they didn't find a deposit there, they would stop. So that's our opportunity now. We have projects on the edges of the basin from the northeast down along the eastern side a little bit around Key Lake, which produced over 200 million pounds in a shallow environment. We're looking in the shallow environments. We're going back to flying radiometric surveys, which we're about to begin on some of our new properties. What we were looking for is buried uranium boulders like the ones that found Patterson Lake. And that's the old-time way of doing it. The difference is they're not sitting on surface. They're under here, and you have to go, you need powerful equipment to find them. Men with scintillometers can't find them the same way a plane can that flies low. So we're going back to basics, and we hope to find new deposits. And thank you.
Chris?
Again, it's Purepoint Uranium Group, Inc. We trade on the Toronto Venture Exchange under the symbol PTU. We have 10 projects in Saskatchewan. 8 of them are 100% owned. One is Smart Lake, which is a partnership with Cameco, and our project that we spend the most of our time and effort on these days is Hook Lake in the Patterson Uranium District. We just completed a $4 million drill program a few weeks ago. We're probably the largest uranium exploration project going for the last few years out there. Dollar-wise, and we're following up on the same sort of indicators and results and discoveries that launched Arrow and Triple R. So we're excited to be out there. We'll be out there for a while, and for the next day or two, we'll be over there. I'm not sure what our booth number is, but I'm sure you'll find us. Thank you.
Chris, Warren, thanks a lot. Thank you all for coming.
Thanks, Nick.
Thanks, Nick.
Thank you.